Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Markets are starting on a slightly subdued note. It's flat as far as the big Sensex and Nifty are concerned.
Market's probably going to remain weak for a while.
Nifty, which is back at 11,000 as we speak.
All of them will subscribe to the 4,500 crore issue, and they are trying to sell 25 assets. 14 of them, they've got expression of assets, interest, and if they are sold, then they can meet that 17,000 crore.
Yes, Bank. So that from the positive zone has turned into the negative and is inching closer to its 52-week lows as well.
Now in the red, 1 point change down on the Nifty.
The HDFC and HDFC Bank, they were the ones which really led the pullback in late trade, and it got help from Kotak.
Bulls limp back to life after getting battered for the last 5 sessions. Short covering, bounce and late trade takes Nifty above the 11,000 mark. The Sensex gains nearly 350 points, led by banks.
Crude oil prices continue to hover around 4-year highs on supply concerns. The rupee loses more ground to the dollar as oil prices remain a big concern.
Financial stocks continue to be under pressure. DHFL, Canfin Homes, Muthoot Finance end the day in the red. India Bulls recovers around 15% from the day's lows.
A torrid day for Yes Bank. The stock falls over 20% but then recovers to end just 3% in the red. The bank's board is meeting to consider Rana Kapoor's position and is likely to appoint a search committee to find a new CEO.
It was a day for the strong ones. HDFC Twins, private banks, pharma majors and Maruti Suzuki all ended the day in the green. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we will wrap out the last 8 hours of trading action in just 5 stories. I'm Prashant Nair, and with me today is my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Well, what a day it's been. Not for the faint-hearted. I think the kind of volatility and the swings that we were getting, and of course that last half an hour big recovery.
Yeah.
I think it was aided by a lot of the commentary that we got during the course of the day. The LIC chairman coming out and making the right kind of noises, and then of course Sapna's story that maybe the government is hoping that the RBI pitches in with a CRR card. So I think we'll be talking about a lot of this over the next 30 minutes. But your thoughts first up.
I think by close it looked like it's a bullish day. I mean, actually, even on charts, etc., it's a very bullish kind of a close because the market opened at a level, it made a sharply lower low, almost back at Friday's low, and then it closed the way it did. So, I mean, indicate it's a positive, it's a bullish close in that sense, but it was an agonizing day. I mean, just watching the screen. Even if you're not trading or going long or short, I mean, just weared one out. Really agonizing. I mean, for most of the day, I think the general sense was one of confusion and panic. I mean, sheer panic, which is the next shoe to drop. Are the big cuts? I mean, take for example what happened with Yes Bank mid-session. Suddenly, Yes Bank dropped about 13-14%. By close, it recovered. And same thing happened with the Dewan Housing, which was trading all right, but then it sort of cracked, fell below 300. India Bulls Housing at one point was down over 20%, actually 25% or so. And there were many other stocks in that space, financial space, which were down over 10-15% at one point. So, I mean, it was it was basically just a guessing game in terms of whether this panic will spread. What is the panic about? And later in the session, much later in the session, it kind of news started to trickle in that some NBFCs have been sort of placing paper. They've been accessing commercial paper market at reasonable rates. And it's not just about those particular NBFCs which were able to raise money, but that's sending the signal that market is still functioning and rates are not through the roof and lending is not frozen and stuff. And that kind of started to show through. And as you said, I think the market is very much hooked on to what comes out of Delhi or the Reserve Bank of India. Remember, RBI has done an OMO, is going to buy bonds, infuse money into the system. But what it's not done is, throw a lifeline to mutual funds in case debt mutual funds in case they face redemptions. No indication that that is required at that point. And that is the feedback we've been getting from debt fund managers. But I think, a market is essentially looking for action. Action from both Delhi and from Reserve Bank of India to try and sort of thaw things out. at this point in time. But, I mean, by close, definitely a positive one. And, you know, given the amount of destruction we've seen, I wouldn't be surprised if this extends for a bit longer. Surabhi, but in terms of stocks, it's an extremely interesting day.
Oh, absolutely. There were all kinds of movers and shakers and trends that were reversing so quickly and swiftly. So let me quickly run you through today's action list. Financials were leading this rebound, as we've been telling you. So on the Nifty top gainers list, you'll find lots of bank and even NBFC stocks. So the HDFC twins were leading from the front. HDFC itself had a nice 2.5% move by the end of it. HDFC Bank was up and about as well. We had a good move on Kotak Mahindra Bank, about 3% up. Axis, SBI, financials were generally strong. And just in terms of the intraday volatility, one stock really perhaps captures the market's essence today. And I'm talking about Indiabulls Housing Finance. Once we got confirmation from that company that they're able to place commercial paper at a reasonably decent rate, 8.6 odd percent, there was a very, very quick recovery on that stock. Let's get the intraday, if we can, of Indiabulls Housing Finance, and that'll tell you the story that I'm really talking about. The other gainers included the Maruti, HUL, Sun Pharma. These were again on the upside on the Nifty. We had, of course, a lot of volatility on Yes Bank because the event is after market hours, and therefore there was this big intraday drop and some recoveries. Yes Bank still ended about 2.5% lower. On the mid-cap side, again, short covering was the name of the game, plus some bargain hunting. So HDFC Standard Life and HDFC AMC. It seems the HDFC group across the board has had a good day today. These were some of the big gainers: Biocon, United Breweries, Balrampur Chini. These were some of the other major names. If I talk about the NBFC universe, because that's where the focus is, again, very mixed trends. So you find stocks like DHFL that are still down 22% after a day like today. Canfin Homes, Group Finance. There was still some weakness around these NBFC stocks. But on the flip side, take a look at something like a M&M Finance, 4-5% up. Bajaj Finance, 2% higher. LIC Housing Finance. So different strokes for different folks. And finally, some mid-cap losers. Jet Airways clearly is struggling with its own issues. 10% down on that stock. Indian Bank and Indiabulls Real Estate, among others. So, well, that's the stock list for the day. Let's straight away now go to our experts, our market guests, to take you through, of course, what these trends really mean. First up, we have Mitesh Thakkar joining in on the technicals. Mitesh, good evening to you. And we have Sanjeev Bhasin also with us from IIFL. Sanjeev, good evening to you as well. Mitesh, first of all, how much credence do you give to this powerful last 1 hour move that we had on the Nifty? A perfect century. What next now for tomorrow?
Yeah. Good evening, Supriya. I think not much of credence given the fact that we were extremely oversold, and you know, we have run away too far from the short-term 10, 20, 30-day averages. So I think very clearly one of these days the bounce back had to come. We will never know, you know, when the bounce back actually happens. While it's happening, well, only after 50 points when it moves, then you possibly get a sense of that. So still, to me, looks like a bounce back. We've fallen in the last leg only from 11,550 to about 10,900, roughly about 650 points. So you count back about 300, 325 points, roughly around 11,200 would be the 50% retracement zone. I would be surprised if the Nifty immediately starts getting past 11,200. And I think that around those levels you will again see supply. What can happen is that we might have made an important low, in the sense that a short-term low could have been made and the decline might be arrested for the time being, and we might get into choppy consolidation, but doesn't look like a reversal as yet.
Okay, some more bounce and maybe just a consolidation kind of a phase. Let's move on to the second story of the day. Macro worries continue to weigh on Dalal Street. Oil prices hover near 4-year highs as producers resist an increase in output. Brent trades around $82 a barrel. Oil sensitives, marketing companies, BP, IOC, HP, airline companies, all were down in trade. Soaring oil prices also affected sentiment. On Mint Street, rupee inched closer to the 73 mark against the dollar. As always, let's bring in Manisha Gupta to talk about oil and what's the sense on the street, commodity street. Manisha, over to you.
Yet another day when you have seen the crude oil prices run up. Of new 4-year highs is what we've seen in further space, and the prices actually have gained up by 45% in last 12 months. This is the 5th consecutive quarterly gain that the crude oil prices are putting in, and you also have seen the hedge funds now get into the party as well. In the last 4 weeks, we have seen a 44% increase in net longs in case of the Brent crude oil prices. Not so much for WTI. That is where we have seen the hedge funds actually rotate money out of into Brent is what the trend has been, and that is the reason you perhaps are looking at a $10 gap between the WTI and the Brent crude oil prices. Well, the fundamentals remain the same as we have been discussing. It is the Iran sanctions from 4th of November, and more countries are now coming forward and saying that they will stop importing from Iran completely. You have Japan saying that, you have Vitol also saying that. So there are companies and countries saying and cutting down on imports, including US, including China, India, South Korea. Many of these countries have started cutting and have said that they would completely cut off by 4th of November. Also, OPEC and Russia so far have resisted the call to increase output. Even if they do increase supplies, the quality, the quantum that Iran has been giving to the world is quite separate. So markets have a bit of a question mark on that as well. The US inventories at a 2015 highs is also quite supportive. And then, of course, you also have traders, banks, global institutions saying that the crude oil prices could spike to $90 per barrel. That has been yet another reason for this bullish run in crude oil prices that we have seen come in last 1 week or so. So even from these current levels, the markets do anticipate further gains in prices. A near-term range really seems to be building between 75 to 85 for the rest of 2018.
Okay, Manisha, thanks very much for that. So that is oil for you. Time for a question from our viewer. Vai Rao has written in from Delhi. He's got 200 shares of IOC, that's Indian Oil, at 176 rupees a share, and wants advice whether to hold or sell. Sanjeev, IOC, what would your sense be?
Well, I would tell him to hold. I think, we may be near a very, very big top for oil. I don't see it extending more than $1 or $2. Secondly, the rupee has not breached 73, and if the government gives the oil marketing companies a window for dollar stability, then I think that will be the icing on the cake. They have been able to raise prices as in accordance with how they, on a free pricing. We know that this is an election year and there can be a little bit of squabbling on further rate hikes. But given the sum of parts, IOC seems well poised for a 20% upside if oil prices start to decline and we get through this rupee crisis. So I think it makes a good contrarian play to be in IOC. It is one of the better OMCs, and I would tell him to stay put.
Okay, that is a positive call on IOC. Stock close to its 52-week lows, but there could be some value emerging. That's the word. Let's move to the third headline now. Financial stocks continue to stay stressed pretty much throughout the course of the day, though there was recovery from the lows. Diwan Housing, Canfin Homes, Muthoot Finance all ended the day in the red. Indiabulls Housing Finance, on the other hand, initially fell almost 20%, but it did manage a very smart recovery. It recovered 15% of that loss and ended down just about 5-odd%. Okay, we have, in fact, a query coming in from Kiran, who's written in from Pune. She has a question on Indiabulls Housing Finance, wants to know about the future of the stock. Okay, we don't know if Kiran owns it or not. We don't know the levels. But since it's a general query, Sanjeev, let me come to you. These stocks have been falling like knives. The question is this a good buying opportunity or is it still too risky?
Well, this industry, the NBFCs have been the poster boys of the last 2 years, gaining market share at the expense of the PSUs and, in the best sector, which is mortgage finance. Now, of course, the cost of money rising, the short-term yields, which constitute about 10% of their book, is a dampener and it will hurt the book. But, Surabhi, it's all about pain and gain, which the stock market tells you. If you want to be in a sector which for the next few years should be the best, given that housing for all and the growth in consumption, then definitely it's a buying opportunity. So if you can bite the bullet and bear the short-term rhetoric, which can go on for another few weeks, then it's a perfect opportunity to buy. In the medium term, I would tell her to rather do a SIP, for the next 2 months or 3 months, which will give her a good average. We are extremely positive for the 2019 after the election, and we think in the next 6 months, these again will be back up and running.
Mitesh, what would your sense be? I mean, actually, let me just, I'm sure many people have questions on the sector, but Indiabulls Housing, other NBFCs, what stand out? Which are the weakest links there?
See, I think, very clearly, the entire sector has got, a lot of beating, and the damage has happened on the weekly and the monthly and the longer term chart. So I think while we might have made an important low today in the sense that extremely oversold levels, IB housing touched levels below 800 while it managed to closing at about 925. The overall sense is that the upsides would now be capped and you will see a lot of supply pressure emerge on any 7-8% rally from here. So 1025 should be the cap in the short term. And overall, I think the stock could possibly on the lower side retest not only levels of 800, but in a slightly weakish market could possibly go even down to about as low as about 720, 730 zone. So I think I would be slightly negative on most of these stocks. Similar patterns are developing on charts of DHFL or LIC Housing Finance, where while one low can be made, one low can be counted possibly because of the fact that we are extremely away from the short-term averages. The medium and the longer-term charts are really damaged, and the stocks will face any kind of will face strong supply on any kind of rallies.
All right, so that is a view on some of the housing finance companies. Well, moving to the next big developing story. Shares of IL&FS group companies perked up in trade. Actually, so did the entire market after the largest shareholder in the debt-ridden company vowed to not let the company collapse. LIC chairman VK Sharma said the state-run insurer is open to all options, including hiking its stake to save IL&FS. LIC currently owns a little over 25% stake in IL&FS. The chairman met Finance Minister Arun Jaitley before he made this assurance. Take a look.
Huge concern. It's a very big concern.
No, we will all try to see that it does not collapse.
Okay, we're going to take a very quick break on that note, but let's leave you with some market opinion that we got earlier in the day. We spoke with Sanjay Mukim of Bank of America Merrill Lynch and Aditya Narayan at Edelweiss Securities. Listen in to that opinion. Stay tuned. We'll take more questions on the other side.
Stuff that goes up will probably lead the market down on the downside as well. I mean, people will sell what they have, I suspect. But it is sharper than I would have imagined, frankly, for it to have happened in the last 2 to 3 days in such a volatile manner. But we have been highlighting for a while that this year India was facing a deteriorating external environment where dollar liquidity was very predictably going to get tighter as it has. And the internal dynamics were going to get a bit messier with the upcoming elections. So the domestic sentiment, which was supposed to have held up the market for a while, was very likely to break. And this is what I think is kind of happening at the moment now. And my suspicion is that both these things are not going to turn anytime soon. So the market's probably going to remain weak for a while.
We are neutralish on the market. Our sense is that the market range over the next 6 to 9 months is going to be a 10,500 to 11,500 kind of range, which is where we are bang in the middle. And that ties in with the fact that as far as the economic recovery is concerned, I think the headline numbers that we've been getting are being interpreted in an exaggerated manner, right? And the fact that there are headwinds in terms of looking beyond would suggest that you can't make the call that the economic recovery is upon you, and so you can start valuing the market up or expecting substantial growth from here. It ties in reasonably well with the fact that you have made strides on the economic front, but it's not a given, and you don't have enough data support to suggest that it's very broad-based.
Welcome back. You are with us on Markets Today Talk Back. We are in conversation with Sanjeev Bhasin as well as Mitesh Thakkar, decoding the day's market action. Well, let's move to the fourth headline now. It was a torrid day for Yes Bank in trade. The stock fell over 20% at one point in time, but then it recovered to end just 3% lower. The hunt for a new CEO continues as the bank board meets today to discuss the same. It is likely to appoint a search committee to find Rana Kapoor's replacement. Remember, this meeting comes after RBI refused to extend Rana Kapoor's tenure, asking him to step down by the end of January 2019. Now, the Yes Bank stock has been under pressure since that time, since the RBI decision. Today, it ended down almost 3%. P. Jaya has written in with a query on Yes Bank. He has been holding 280 shares of the bank for the past several weeks, and he wants to know whether he should hold or sell out. Now, again, we don't have his entry price, but my guess is he is suffering losses in this recent major fall. Sanjeev, let me come to you. If someone's already hurting on Yes Bank, is there any point exiting now? Or, I mean, I don't know, does the averaging even work? Or should you just take the hit, get out till clarity emerges?
Yeah, so Surabhi, another pain point given that again every mutual fund worth his salt and foreign investor and insurance company had Yes Bank, and they all found it, to be one of their best NAV boosters. And unfortunately, everyone suddenly, looking for the exit door. I think a large part of the pain at 200 rupees is priced in, market cap of 50,000 crore, and it doesn't make one man the only key behind it. There are a little bit of imponderables, but I think they're getting in priced in. I would actually stick my neck out and tell him to average some here if he can. And I think in the next 6 to 9 months, you should be seeing levels closer to 275. The only caveat here is we are not aware of what the encumbrances can be. If it's a suitable leader from within the bank, I think it will be a very, very welcome step going forward.
Okay, we should know answers to not all, but a few of those questions, maybe, just maybe, when the board decision is out later in the evening today. The last story of the day, it indeed was a day for some of the stronger ones. I mean, the HDFC Twins Bank and HDFC Limited, Kotak Mahindra Bank, 3%, SBI, you had the Bajaj Finance. The stronger ones basically did well. Pharma majors like Sun Pharma and Aurobindo also, along with Maruti, ended on a positive note. So, I mean, there were stronger names which kind of sort of stood out. Money flowed into them. We've got a question. Rupen Power from Mumbai has written in with a question on Sun Pharma. He's been holding 100 shares of Sun. His purchase price is 920 rupees a share. Been holding them for the last 2 years. 920. Stock's at about 640 today. Wants to know whether you should hold or sell. Mitesh, never easy, but what would you tell him?
No, I think my advice would be to average it out. I think after about 2.5, 3 years of downtrend, the stock is now showing signs of uptrend on longer-term charts. While it's gone up in the last 3 months, this month has been more of consolidation with the stock down about 2% this month. But I think it looks like that the stock will now not be seeing levels below 570, 590 support zone. So I think good levels to average it out. Once it gets its price lower, I think the exit could happen easily. I would look at targets close to about 750 to about 800 in the next 6 to 8 months or so. So I think that'll give a good exit opportunity.
Okay. All right, gentlemen. With that, we're completely out of time on this edition of Markets Today Talkback. Thank you very much for being with us on the show today. And thank you to all our viewers for watching. Prashant and I take your leave. We will see you with the markets again tomorrow.